Have you ever wondered why the Canadian dollar is struggling right now? So the Canadian dollar is at its lowest point since the pandemic, at least relative to the US dollar. Compared to the other major currencies, the Canadian dollar isn't doing that bad. But since our closest trading partner is the US, this obviously isn't good. And plus, with Trump wanting to put tariffs on Canadian products and wanting to annex Canada by economic force.
To annex and acquire Canada.
No. Economic force, because Canada and the United States, that would really be something.
Yeah, I can see why there's some concerns on the future of the Canadian dollar. As of right now, the Canadian dollar is worth approximately 69 to 70 cents US, which is the lowest it's ever been since the financial crisis of 2008 and early pandemic of 2020. Now, why is that? By the way, can you believe that the pandemic was 5 years ago? I mean, time flies. But anyways, when countries are going through recessions or economic uncertainties, people tend to put their investments into the US market. So higher demand means that the US dollar will increase in value. That's basic economics 101, supply and demand. And in 2024, we've seen many countries going into recession or on the brink of going into recession. And again, the US dollar has a history of going up in value when the economy isn't doing too well. And because Canada is US's closest ally and neighbor, we're supposed to be an ally until Trump wanted to annex us. Canadians obviously feel negatively impacted when the US dollar goes up compared to the Canadian dollar. So in terms of investments and keeping your wealth, what's the play here? Now, I'm not a fortune teller, so I can't tell if the Canadian dollar will go up or down relative to the US dollar in the next couple months. Even economic professionals can't seem to even agree on the long-term forecast of the Canadian dollar. You have people claiming that Trump tariffs will basically destroy the Canadian dollar, and you have another group of people that claim that when the Conservatives comes to power, their policies are going to help the Canadian dollar. Now, there's two ETFs that I would like to talk about, both tracking the S&P 500. So VFV and VSP. Now, personally, I feel like the S&P 500 is never a bad investment. I know there's people out there that claim that a global ETF like the XEQT is a better investment because it's more diversified. Like the XEQT ETF invests in other markets as well, like Asia and Europe. And historically speaking, the US markets perform on average better than emerging markets which are held in globalized ETFs like XEQT. Now, I know there's some years in which other markets perform better than the US market, but I'm just saying on average, historically speaking, the US market performs better in general. So what's the difference between VFV and VSP? Well, to put it simply, the VFV ETF is unhedged, whereas the VSP ETF is hedged towards the Canadian dollar. If an ETF is hedged, you can find it in the ticker symbol when you type it into Google and it says Canadian dollar hedged. What does all this mean? Well, a hedged ETF reduces the risk of currency conversion. Let's simplify this even further. This is all you need to know. If an ETF is unhedged, if the US dollar goes up relative to the Canadian dollar, your ETF will gain more value based on the exchange rate. Well, if it's the other way around and the Canadian dollar goes up relative to the US dollar, well, now your ETF loses value based on the exchange rate. So for example, let's look into VFV. If the S&P 500 goes up by 10% and the US dollar goes up in value 8% compared to the Canadian dollar, your total on-paper profit for the ETF will be 18%. Now, same goes the other way. If the S&P 500 goes up by 10%, but the US dollar drops by 8% relative to the Canadian dollar, your ETF's on-paper profit will only be 2%. Well, what about hedged ETFs? Since hedging takes away currency conversion risk, your on-paper profit will still be 10%. Actually, it's a little bit less because hedging has some minor and hidden fees. So historically, looking at VFV and VSP, VFV is outperforming VSP in the past 10 years or so. And the only reason is that in the past 10 years or so, the Canadian dollar has been dropping in value compared to the US dollar, so in the past 10 years, VFV is a better investment than VSP. So let's simplify this even further. Unhedged US dollar goes up means good. Hedged Canadian dollar goes up means good. I mean, it's not good, but you just don't lose value. Now, an ETF like VFV has a 15% dividend withholding tax by the US government. Doesn't matter if you put it into TFSA or RRSP. The withholding tax is only waived if you buy the US version of the ETF and put it into RRSP, so the US version of VFV is VOO. VOO is the same as VFV, it's just traded under the US stock market. If you want a detailed review explaining the difference between VFV and VOO, Canadian in a T-shirt made a great video explaining the differences, so I encourage you to check it out. Another way you can protect your wealth against any devaluation of the Canadian dollar is precious metals. So gold, for example. So throughout history, precious metals like gold or silver was used as currency to purchase goods. Now there's people that claim that precious metals like gold isn't an investment but is used as a tool to store your wealth. I would actually argue the opposite. I mean, gold is finite and it's valued everywhere. I mean, there's a reason why powerful countries has been storing gold under heavy security. Historically speaking, gold not only protects you against inflation, but it rises in value as well. So it doesn't matter if the value of the Canadian dollar tanks in the future. It just means that if you sell your gold in the future, it's worth more Canadian dollars. Personally, I've owned gold in the past, you know, those 1 ounce bars, but storing them was a headache. I mean, you could put it in a safety deposit box in a bank. I mean, that's a little bit awkward. I don't know if I trust that, even though it's a safety deposit box in the bank, or you can store it at home, which even that is a little bit awkward. Either way, I mean, for me at least, storing gold is awkward. So ultimately, I sold it and just bought ETFs. But buying precious metals like gold is a great way to protect yourself against the weakening Canadian dollar. Of course, as with any investment, it comes with risk as well. There is a small chance where precious metals value will completely tank in the future, but I doubt that's going to happen for gold, but it is a risk. So going back to the original question, what's the play here for investing? Again, I'm not a fortune teller, so I can't tell you if the Canadian dollar has hit rock bottom or the worst has yet to come. But if you think the Canadian dollar will drop even more, consider investing in VFV or VOO if you have an RRSP account, because RRSP protects you from dividend withholding tax from the US government for VOO. Or consider investing a small percentage of your money in a precious metal like gold. Personally, I invest in unhedged ETF regardless. I just accept the fact that I'll never be able to time the market. I can't predict if the Canadian dollar will go up or down or sideways, so for me, all ETFs are unhedged. I mean, I am young enough to take currency conversion risk of unhedged ETFs. And plus, hedged ETFs has a slight, very slight, hidden fee which isn't marketed. And for my portfolio, I try to keep fees as low as possible. So yeah, that's it for today. If you learned something from this video, a like and sub will always be appreciated. And plus, let me know what your investment strategy is with the weakening Canadian dollar. And by the way, if you're new to the channel, I make financial tips for Canadians in my long-form content and financial comedy in my shorts. With that said, thank you for watching and I'll see you next time.